The Chinese move, I think, raises some questions about the true strength of the Chinese economy also.
The RBI governor is not too worried about the sharp fall in the Chinese yuan just yet, provided it stays at the current level.
Crude prices stumbled after yesterday's sell-off. Brent down 1.5% to $46 a barrel. WTI NYMEX barely holding on to the $40 mark.
A sharp sell-off in the second half hits the Indian markets hard. The Nifty cracks below 8,400. The Sensex tumbles by over 300 points thanks to the banking, IT and metal stocks.
So I'm really excited to share these. These three services: He, Do and I.
Infosys widens its digital thrust, announces 3 new services to rapidly expand its presence in the digital space. Aikido is a new mantra.
Next month, we hope to announce the small finance bank licenses.
Payments bank done. The focus shifts on to small bank licenses. Raghuram Rajan says the name of the successful applicants will be released in September.
Once implemented, it is expected that all states will have revenue gain, will have revenue buoyancy.
Revenue Secretary Shaktikant Das denies reports of a 25% GST rate, says the government is still doing the math and the final rate will be reasonable, adds that the revenue neutral rate will only be an indicative number and not absolute.
The NHAI has a budget of more than 70,000 crores this year. That's 3 times the amount allocated last year.
Unitech gets an interim stay from the Supreme Court for paying its buyers the highest ever penalty awarded by the Apex Consumer Court for a project delay. Former Finance Minister P. Chidambaram appears on Unitech's behalf in this high-profile case.
It's difficult to say that so far there has been any real pickup of consumer demand.
All may not be well for the country's largest car maker. Maruti Suzuki chairman R.C. Bhargav says demand in the retail segment remains subdued.
More drama in Greece. Prime Minister Alexis Tsipras calls for snap elections on the 20th of September. Will resign as Prime Minister today.
Key question is, yesterday the gap down was bought into, will today also the gap down be bought into? That really is the big question.
There goes the bell. It's just about 0.25% lower in terms of the opening rates. The pre-opening rates were a little more cheerful.
The universal banks can do anything these payment banks can do. And the payment banks can't do some of the things the universal banks can do.
We are today having the franchisee model with the business correspondent. So, on the one side we have the low-cost business correspondent model. On the other side we have the digital for the incoming generation. And in the middle we have the branch offering.
To exclude Maruti from the rest of the industry, the growth is virtually absent in retail terms.
You're not going to get hockey stick growth, right? But what you will get is sensible investment, sensible returns, and I think for businesses, I think it will actually work out very well, and that should translate into a stronger market.
The Nifty, as we speak, is almost at the brink of that 8,400 mark. We're definitely at the low point of the day. It's a fall of more than 1% on the Nifty.
Vedanta, Ultratech Cement, both down 3.5%. Idea Cellular down 3%. Bharti Airtel fell in day trade. Z Entertainment, so relatively stronger stocks were also underperforming today. Tata Motors was down about 2% as well. There were only 5-6 gainers on the index.
Well, it's been a day when bears took absolute control over the Lal Street, especially in the second half of the day. The Indian currency also took a hit, coming down to a fresh 2-year low, and there is no respite for crude prices. In fact, all international markets are also weak. Market action making headlines today on IBH. Thank you for joining in. I'm Surbhi Upadhyay and Nayantara Rai joining in from the Delhi studios. Hi, Nayantara.
Good evening, Surbhi. It's been an ugly Thursday. There's no stemming the crude prices that have been crashing, the decline in the rupee, all of those factors together playing spoiler on the Lal Street. And you know what? Globally, the market's mainly under pressure. Look at the Dow. It's down by over 200 points. We've got a lot of that and lined up for you right here on India Business Hour. Our top story tonight, the global markets, and we're going to begin with Asia. Chinese markets continue to remain volatile. The Shanghai Composite closed 3.42% lower in trade. That index is now almost 1,400 points lower than it was just 2 months back. Earlier today, China's central bank set the yuan's trading midpoint sharply stronger at 6.3915 against the dollar. The currency can trade within a 2% band above or below that. The RBI Governor Raghuram Rajan, though not willing to get too perturbed just yet. Speaking at the conclave of State Bank of India, the governor said he wouldn't get too worked up about the sharp depreciation in the yuan just yet, and provided it stays at the current levels. Here's more from the RBI Governor.
The Chinese move, I think, raises some questions about the true strength of the Chinese economy also. And of course, they moved on multiple fronts, including trying to support the stock market, now the currency, and then an infusion of tremendous amounts of liquidity. So it does ripple across the global economy. You have seen in the last few days a number of currencies have depreciated in tandem. We, of course, have been more stable than the others, but we have also depreciated some.
All right, on to the other big movement of the day. It's been a fresh two-year low for the Indian currency, with the rupee ending just above the 65.50 mark. Lata Venkatesh is now joining in with her take on the depreciation that we've seen of late in the currency. Lata, should we be concerned?
Just a word about what happened today. It was falling in concert with other currencies, but if you thought that it was the equity market fall which was driving the rupee's fall, then perhaps that's not an adequate explanation. A lot of the dollar buying were by PSU banks, state-owned banks. Now, normally state-owned banks buy dollars when the government wants to buy dollars. So the mood in the dealing rooms was that this is either a defense-related payment or an oil-related payment. Maybe oil companies were being asked to hedge at current crude prices because they're so attractive. So it was actually government-related payment that was going through. This was, of course, followed by FIs also purchasing dollars, but they were not the dominant or the first buyers of dollars in the market. What was the Reserve Bank doing? Well, apparently at 65.50 plus, there was some supply of dollars from the Reserve Bank, but it may have just been to smooth out volatility, especially in the dying hours of trade. There are two reasons why you could see this continue. One, the rupee ended more or less at the lowest point of the day, 65.54. The other reason is that other Asian currencies have also been falling. The ringgit, of course, has been falling like a straight line. Today, it was down more than the Indian rupee. Indian rupee was down 0.5%, ringgit was down 0.7. The rand was down 0.35. The Filipino peso was down 0.5. The ruble was down 0.9, almost 1%, and could do even worse. All these, of course, especially the ringgit and the ruble, are affected by crude prices touching new lows. NYMEX, of course, touching fresh 6-year lows. So looks like the fall in Asian equities and currencies could go on, and therefore there's little more for the rupee to fall. I must still say that compared to all EM currencies, practically all EM currencies, the rupee is the strongest performer since the taper tantrum of 2013.
Thanks, Lata, for joining us with all of that. So it's been a disastrous day on Mint Street as well. And like Lata was pointing out, one of the big reasons you've seen currencies worldwide under pressure is because of crude. So let's talk about crude prices now. Through the day, crude futures, especially the NYMEX crude, had looked like it was going to breach and fall below $40 a barrel. Turning positive now, you have NYMEX crude and Brent crude at those levels today. We should also point out about how we have seen almost a third of the value being lost since the month of June when we talk about crude prices, mainly because of the stockpile in the United States. And that is having a major effect on Wall Street as well. But before we go any further, here are what experts make of crude prices today.
I think the double dip in crude was very much sort of set in place as the surplus in the market has been expanding. We were at a surplus of roughly 1 million barrels per day when OPEC actually made the decision to not cut, and now we're at close to 2.5, 3 million barrels per day. So there's no surprise that crude prices are sort of adjusting in that sense. But what we'd say is, yes, even though we see the breakdown lower, eventually, the faster it falls, it sort of helps as a catalyst to balance markets in 2016 faster as well.
So that's one expert's view on where crude prices are headed. It's been the biggest trigger for Wall Street as well after the FOMC minutes were released late last night that showed that perhaps we're not going to see an interest rate hike in the month of September. A sea of red. Look at the Dow, the Nasdaq and the S&P, the kind of deep cuts that we're seeing on Wall Street. Today, the main theme of the day has to be the global rout. We've already told you about Asia. That theme very much playing out in the United States. European markets, no different across the Atlantic. What you're also going to see are the British FTSE, the German DAX and the French CAC trading with deep cuts. So as I was telling you, and we were pointing out earlier in the show, it's not a good day for the global markets. And Shilpi, there's a lot of news coming out of Greece as well.
Oh yes, sudden headlines coming in over there. So let's tell you what's going on. That's the big international story of the hour. There is a lot more drama going on in Greece as Prime Minister Alexis Tsipras has decided to call for snap polls on the 20th of September. And this in turn means that he will be stepping down soon. Tsipras has been facing a rebellion within his own party for quite some time now after he went ahead and inked a fresh bailout package with the creditors, agreeing to some of the tough terms set by various lenders.
So after all of that drama that we've been seeing after the last couple of months, Alexis Tsipras is going to step down. We're going to see fresh elections. We'll get to our markets in just a bit. But here's the other big story we're tracking today. We saw a role reversal of sorts for SBI chairperson Arundhati Bhattacharya. She's the one who normally gets grilled by the RBI governor, but like I said, it was a role reversal. She interviewed Raghuram Rajan today. The RBI governor did assure the ace banker the central bank was open to any constructive suggestions that may be coming in from the banking fraternity, and was also crucial for sectors like real estate to lower rates to ensure that the NPA situation doesn't get worse.
Today the base rate is at 9.7 and I'm told that the real estate stock is around 4 years. Now I was just thinking, is it possible that for a little while something of this kind be allowed? Given the fact, sir, that this is one of the portfolios where the NPA is lowest. Even today, our portfolio, which is 30 lakhs and above, the NPA is only 0.29%. So there's been no bubble built up over here. And maybe we could also ask the realty players to bring down their rates also equally. Means there is already a record as to at what rates they've been selling. So something of that sort means, I don't know, this is something that could be used as a kicker for getting the retail demand started.
Well, I never say no to your ideas. We'll examine them. I think there is something to be said for the fact that with the slow pace of transmission, that some front-loading by the banks themselves may be useful. But I need to explore the thinking behind the earlier views on this and what kind of safeguards, if one decides to go ahead, would have to be put in. I do also believe that if real estate developers who are sitting on unsold stock started bringing down prices, that would be a very big help to the sector, because once there's a sense that the prices have stabilized, more people would be willing to buy. Absolutely. Now, I don't know what the level is, and it differs across the country, and it's not clear that in some parts of the country there's excess stock. But I think we need the sector to, in a sense, the market to clear. Very true. And with growing unsold stock, we need to figure out ways to do it. Some of it may be by making loans easier, but we also don't want to create a situation where prices stay high without at a level which means that demand may not pick up to the extent that is necessary. So we need to explore all these issues, but I think we are very open to suggestions.
Well, the Reserve Bank of India yesterday granted licenses to 11 new payment banks that won't be able to give loans but will enable digital payments and remittances. While the RBI sees these payment banks as providing the last mile connectivity to the unbanked, legacy banks think that the new guys on the block could perhaps cannibalize their low-cost savings. CNBC-TV18's Lata Venkatesh and Ritu Singh wrap up the contending views.
Raghuram Rajan may have ushered a new era by granting licenses to 11 new payments banks. But the existing banks aren't cheering the move. They correctly see these new entrants as taking away their cheapest source of money, the savings deposits.
We are getting 11 new players, and obviously when there is so much of competition there will be poaching, and we do not know what is the methodology of that poaching or what will happen, but it may cannibalize on the existing business.
The governor himself, while agreeing that the field may just get more competitive, said that the universal bank should see payments banks as complementary and not competition, since payment cannot offer many of the services that the universal banks offer.
These new banks would be additional. They would not compete as much as complement the existing system. The universal banks can do anything these payment banks can do. And the payment banks can't do some of the things the universal banks can do.
Chanda Kochar of ICICI Bank echoed the governor's view that the entry of niche banks will only enhance the financial ecosystem.
Payment banks are only going to be complementary to whatever else the rest of the banking system is doing. Everything that the payments banks can do, the universal banks can do in any case. So I think it's just, we welcome actually, the entry of new players, something that is going to actually enhance the financial ecosystem.
The payment bank license winners include large Indian conglomerates like the Birlas, Ambanis and Bhartis, who also have evolved telecom backbones. The unspoken fear of the legacy banks is, will these payments banks one day be allowed to graduate into full-service banks? In Mumbai with Lata Venkatesh, Ritu Singh.
And Paytm founder Vijay Shekhar Sharma, who is also one of the successful applicants, says his main goal now is to be one of the first organizations to start offering the payment bank services. Like yesterday, he told CNBC-TV18 he may be the fastest, but he also wants to run a marathon.
It is totally about how we can bring new customers who have traditionally been ignored by, let's say, universal banks which are there. And these are the customers who are young, these are the customers who are in rural area, these are the customers who are technology savvy somehow. We want to be one of the first ones to to start. We're really excited and we've started working, and we'll wait for what RBI puts a guidance and next steps to do. And we want to be much before the 18 months timeline that we are reading about.
And now let's turn our attention to all the market action. Heightened sell-off in the second half of the day has taken the Indian markets lower, with the Nifty closing below the 8,400 mark, while the Sensex lost more than 300 points today. It was banking stocks coupled with a lot of Nifty heavyweights like Reliance Industries and Infosys, which took the market lower. So we had bears completely dominating the action today. Nayantara?
And Sylvie, while the global worries, be it the impending Fed rate hike, will it happen, not happen, the yuan devaluation, have all triggered a bout of volatility in markets. Citi's Aditya Narayan, who donned the hat as CNBC-TV18's guest editor today, is just not perturbed. Citi's MD and India strategist feels the Indian economy is slowly but surely turning around, which means higher levels for the markets in the coming months. Nimesh Shah and Arif Sherwani get to that story.
He is one of the most bullish voices on the Indian equity story. Aditya Narayan, MD and India strategist at Citi, says the quality of growth in India has improved, and that's why the country may be entering an extended economic growth cycle. However, while the long-term prospects look sound, Narayan is also quick to point out that in the short term, scope for disappointment, be it earnings or reforms, is very limited.
The market still has very little appetite for big misses or disappointments or corporate governance issues. And I think that's a reality one has to live with at this point in time. It's a decent market, but it's clearly not good enough to kind of override any of these kind of events.
Citi's India chief continues to be optimistic on the market and feels the earnings downgrade cycle is in its last leg.
I do believe earnings are going to effectively pick up. It's not going to be so top-line driven. I don't think it will necessarily have too much GDP growth support. But I think from an earnings perspective, I think, the last quarter of this year is when you start looking up.
Citi remains bullish on the Indian pharma sector, which has gained 11% in the last 1 month as the rupee weakens.
One of the reasons why Lupin is our top pick is simply because we think they have a stronger, business model than others, so that there's going to be greater leverage on it.
Narayan says India offers a favorable risk-reward opportunity at the moment, but patience will be key.
I think economy-wise, it's actually a bigger thing because it is an extension of, a fair amount of work that's been going on for a bit. So I think in that sense, it moves this entire financial expansion and financial inclusion bit, another step forward. I think the other thing that is interesting with these licenses is the fact that whereas so far most of these licenses have been somewhat closed, restricted, been very stingy in terms of the numbers that have been given out. This time, A, they're very generous in terms of the numbers, and B, I think the backgrounds of the promoters is actually very broad.
Citi believes that the Sensex will touch 35,000 by June next year. That's one of the most aggressive targets on the street. Short-term volatility notwithstanding, the brokerage feels India is an attractive market that can offer steady returns over the next 2 to 3 years. With Nimesh Shah, Arif Sherwani.
It's been one space that every IT company has been looking to grow in, and Infosys today announced 3 new services to rapidly expand its presence in the digital space. Aikido unveiling the new plan was none other than MD and CEO of the company, Vishal Sikka, who highlighted the new areas of interest.
3 services, 3 steps forward. 3 services that I think by themselves may not be that big a deal, but together, and together with everything that Infosys offers, will change everything. So I'm really excited to share these. These 3 services, Key, Do, and I.
So what exactly are these 3 new service lines, and how is it going to impact the company's balance sheet? Let's ask Kritika Saxena, who has more details. Kritika, what will this mean for Infy?
Well, up until now, Vishal Sikka had been talking about innovation, automation, digital, but there hadn't been anything clear as far as his strategy for digital is concerned, even after over a year, Vishal Sikka coming on board, and that was clearly worrying investors. So now, what today's announcement has done has given a very clear-cut focus on what Vishal Sikka wants to do with the digital strategy, and as a part of that, he has launched 3 new digital services under the banner Aikido. Now, it sounds very creative, yes, but it's very, very technical, a field day for IT geeks over there. So the first service is Key, which essentially stands for knowledge-based management. What this means is that this comes under consulting. So essentially understanding the basics of an organization, understanding the cost optimization and creating models for them. The second part is design thinking, or Do. Now both Do and Key will come under the consulting division, which is right now spearheaded by Sanjay Purohit. Remember, consulting is a very high margin business, so that is a plus given the fact that there are 2 new service lines within the consulting sector, within digital, which will bring in high margin business. It will remain to be seen if at all they do get businesses, but they'll also leverage existing services like engineering services, BPO, even a couple of services from Panaya to be able to leverage specifically into the Do or the design thinking aspect of it. The third is going to function as a separate service line, and it won't come under consulting as such. That is essentially platforms. Remember, platform has been a thrust ever since Narayan Murthy had come back for the second term. So it's been about 3 years that Infosys has been trying to gain market share in platform, but nothing significant has happened. Now under I, they're going to set up mobile platform, pay as you use services, which has been very new for Infosys. IoT, that is the Internet of Things, API, service automation platforms, and Infosys automation platform, which is going to be a separate platform that they will launch. So all in all, in the long term, yes, this is very important given that there is a clear-cut strategy on digital, but in the short term, we need to wait and watch out to see how investors react to it, because it will be a little bit of a disappointment that we haven't seen anything significant coming on board from Infosys. But yes, long term, this is important.
Right, thanks, Kritika, for joining us with that story. Infy was down 3.5% in trade, but all these announcements were made post-market hours, so this stock will be in focus tomorrow. The NHAI has a budget to spend 72,000 crore rupees on roads this year. That's 3 times the 23,000 crores it spent last year. Also, the Roads Ministry is very confident it will bid out the planned 10,000 kilometers of roads this year. In fact, it's already bid out 4,000 in the first 4 months. Reena Barua gets you the story of all of these plans on the initiatives that are being taken by Nitin Gadkari's ministry to disentangle stuck projects.
The road sector has crossed quite a few milestones. Not only has the ministry given out bids for 4,000 kilometers, but is confident that it will easily achieve the target of 10,000 kilometers this year.
We are quite confident that we shall achieve the award target. A lot of hard work and preparatory work has gone into this. The road construction activity actually typically picks up more in the second half of the year. And so you would get a sense of where we are actually sometime around December, January.
The National Highway Authority is also ready to spend 3 times more than it spent last year.
Last year we spent about 23,000 crores.
And this year our budget is for 72,000 crores.
The bigger achievement of the ministry is to have restarted several stuck projects through SOPs, like allowing cash-strapped companies to defer their equity premiums and allow companies to exit after construction.
Quite a few policy initiatives have been introduced already, and some more are on the anvil. Rescheduling of the premium that is payable to government, that has been not only approved, but now it's been put into play, and quite a few projects have benefited on that account. In this architecture, what is payable to government is deferred, and to that extent really it adds a little comfort to the lenders so that they can pull out their money at an earlier stage. The second policy initiative was equity exit. This relates to the projects awarded before 2009. We have now brought these projects at par with the post-2009 MCA, which allows equity exit after 2 years from completion.
Part of this process will involve the infusion of 1 lakh crore rupees. That's double what was infused into the sector last fiscal. Also, the National Highway Authority of India has evolved a hybrid annuity model to ease the concessionaire's funding risk. Around 13 projects with an estimated cost of 14,400 crore rupees are being planned on the hybrid annuity model. If successful, this new model will bring back private participation in highway projects. In Mumbai with Prerna Barua, this is Arundhati Ramanan.
That's highway projects finally on the move. Okay, moving on to another big story coming in from North Block. CNBC-TV18 learns that government officials have met Justice A.P. Shah, who headed the MAT panel, and that meeting took place today to draw up the government's final stance on the MAT issue. Sapna Das is joining in with exclusive details. Sapna, we know how critical this is because the government has to take a clear stance on MAT in the all-important Castleton case, right?
Well, yes, this was an important meeting, and it was Justice A.P. Shah. The meeting was, of course, headed by the Union Finance Minister, and other senior officials of the ministry were also present. What we understand is that, this entire matter of the A.P. Shah panel recommendations on the MAT issue is still under consideration. We are already aware of the fact that they've already asked for more time from Supreme Court to give its reply on the Castleton case. Well, it appears that, the government will be close to a resolution in the sense that we understand that, the clarity is likely to emerge probably as early as next week. This is what we understand as of now. So we just have to wait and watch and see whether next week is when the government will actually come forward and clarify its stance, or probably, they will likely do it only at the time when the reply from the government side is sent on the Castleton case. That's one. The second aspect, of course, is the fact that we understand very clearly that the A.P. Shah panel has discussed the issue of MAT only on the foreign institutional investors. There was a lot of talk, a lot of discussion in various quarters, saying that probably the ambit was larger, wider, probably even the foreign cores have been covered. There's a very clear indication on that front that CNBC-TV18 has picked up, which is basically the issue deals only with levy of MAT on foreign institutional investors. Now, the key question as to what has the Shah panel really recommended and how will the government move forward on that, that is something that we have to really wait and watch and see. But surprisingly enough, what we have understood as of now is, unlike what was being said earlier, is the fact that probably the Shah panel has not really gone against the government's stance on MAT. So it really remains to be seen what those exact recommendations are like and how the government plans to move forward on that.
All right, Sapna, thanks so much. So the wait continues for the entire FII fraternity to find out what the panel suggests and what the government's view is going to be. Moving on, the government has not decided upon a final rate on GST. That's the word coming in from Revenue Secretary Shaktikanta Das, who says that the government is trying to keep the proposed GST rate as reasonable as possible to ensure success of the new indirect tax regime and better growth of the economy.
The effort of the government is to make the tax rate reasonable so that GST is a successful experience for the people of India. Now, what we mean by reasonable, how much it will be, is a matter of detail on which we are working, and it is our effort to keep it as reasonable as possible so that, if you have too much of a high tax rate, obviously you don't achieve the objective of the GST.
So that's Shaktikanta Das, Revenue Secretary, making it quite clear that the GST rate will be a reasonable one. Of course, what is reasonable is the big question. Now, the Revenue Secretary just did not speak only about the GST. He also spoke about P-notes, once again reiterating the government's stance that this government will not ban P-notes. He says the Finance Ministry is in talks with the market regulator to tweak certain KYC norms, but a blanket ban is completely out of the question. Do remember, markets were spooked when the SIT had come out with a report against P-notes.
It is nobody's intention to ban or do away with P-notes overnight, because we do understand the consequences of this, and as the finance minister has said it, I think in media he said it the other day, that the government will not do anything which goes against its very own effort to unleash growth into the economy. The government will not do anything which undermines the growth, which undermines the growth current in the economy, which undermines the growth momentum, which is, green shoots are seen now all over. So government will not do anything of that sort. So therefore, a very carefully considered decision on the recommendation of SIT will be taken. But well, at the same time, SIT feels that the regime needs to be improved. Government will examine how to improve the KYC requirements.
Well, that's the Revenue Secretary outlining that there is no need to worry over participatory notes just yet. On that note, we wrap up this edition of India Business Hour. Thank you so much for watching.